Hey guys, welcome to the Chapter 9 recap, Other Health Insurance Concepts. This is the last chapter that you have on the national part of your exam, so you're going to see a lot of overlap. After you finish this chapter, you'll transition to the state portion of your exam and the state study material for your exam. Each state varies a little bit differently between the rules and regulations, so you're going to really want to hone in on whatever state you're taking this initial test in, and really understand the differences there. But this last chapter recap should go pretty quick. There's going to be a lot of overlap. Of course, it's the last chapter and kind of just goes over some different kind of health insurance concepts. So let's just go ahead and finish this thing off real quick for you guys. Miscellaneous features and provisions. Owner's rights. Designate and change a beneficiary. Make other changes without beneficiary consent. Again, owner's rights. If you own the policy, you're able to change and designate beneficiaries as you wish. Dependent children benefits. Eligible dependents. Coverage may not be terminated if child is incapable of self-support due to physical or mental handicap. Obviously, if you're minor, you're eligible dependent, maybe you have a physical or mental handicap, you're not going to be able to just terminate this policy or because they're not able to pay for it themselves. So the eligible dependents, the coverage may not be terminated if child is incapable of self-support due to physical or mental handicap. Primary and contingent beneficiaries. Primary beneficiary is the first person designated on your beneficiary form. Contingent or secondary beneficiary receives the benefits if primary beneficiary dies before benefits are payable. No beneficiary, if you don't have a beneficiary listed, the benefits are just going to go to the deceased estate. Modes of premium. Mode. The more frequent a premium is paid, the higher the premium. Guys, like I said earlier, kind of buying in bulk. If you have an annual premium, it's going to be a lot cheaper than whenever you pay monthly premium. Not by an astronomical amount, but it is going to be significantly cheaper. So if you can pay annually, your premiums are going to be cheaper. If you pay monthly, obviously it's not as much money out initially, but over the course of a year, it's going to be more money. So the more frequently the payment is paid, the higher the premium will be. Coordination of benefits provision. The purpose is to avoid duplication of benefit payments and over-insurance when an individual is covered under multiple group health insurance plans. Basically, they're trying to keep you guys, or keep an individual rather, from double dipping on several different health insurance policies, and if maybe they have an accident and they're covered under both policies, they just don't want to double dip and have you over-insured or duplicate the benefit payments. Establishes a primary plan responsible for providing full specified benefit amounts and secondary or excess provided. It's responsible for any additional benefits payable. So maybe you have two different ones that, two different health insurance policies that cover the same, accident, health expense, whatever it may be. You're going to have a primary one that pays for, their maximum amount. And you might have a secondary one that pays for the additional or excess, benefits that are provided for. Occupational versus non-occupational. Occupational coverage. Benefits for illness, injury, or disability resulting from accidents or sicknesses that occur on or off the job. Non-occupational coverage only covers claims that result from accidents or sicknesses occurring off the job. So occupational, you kind of get, the best of both worlds. You're going to get benefits from illness, injury, disability, from accidents or sicknesses either on or off the job. Non-occupational coverage is exactly what it sounds like. You can only get claims from accidents or sicknesses off of the job. Total, partial, and residual disability. Total disability, defined differently under different policies. It's going to depend on your insurance carrier what total disability is, but really typically it's going to be your inability to work, as a blanket piece of, jurisdiction or advice there. So total disability, typically it's just going to say, you're unable to work, you're unable to provide income for your family. Partial disability, inability to perform one or more regular duties of one own's occupation. So partial, you're still able to do your job, but you're not able to do your job to the full extent. So you don't meet total disability, but you're not totally, ready to work either. Residual disability provides benefits for a loss of income when a person returns to work after a total disability, but cannot yet work at pre-disability level. So you're returning to work, you're kind of in that partial disability area. They're going to provide you for the loss of income whenever you do return to work from a total disability, but yet you cannot still work at how you were before you, incur that accident or that sickness or whatever qualified for that disability. Managed care attempts to contain costs by controlling participant behavior. They want to control their risk. You want to control your risk. Have good behavior. Don't act up. Don't do crazy stuff, I guess. Subrogation process by which an insurer seeks recovery for the amount paid to the insured from a third party who may have caused losses. So, it's a type of lawsuit process by which an insurer seeks recovery of the amount paid to the insured from a third party who may have caused losses. So kind of think of that type of a lawsuit, when the insurer is starting to seek recovery from the amount paid to the insured from a third party who incurred the losses or who caused the losses. Workers' comp, eligibility. Work and workers' compensation, covered occupation. You suffered a work-related injury or sickness, regardless of fault or negligence. Workers' comp, they're kind of a disability aspect. If you suffer an injury or sickness on the job, they're going to give you workers' comp and help pay for, whatever missed compensation that you missed. Benefits from workers' comp. You get medical benefits, income benefits, death benefits, rehabilitation benefits. Workers' comp is rather inclusive as long as it is a work-related injury or sickness. Obviously, outside of the job, they're not going to count towards that. So just know that workers' comp obviously has to be work-related, but the benefits are rather inclusive. Medical benefits, income, death, and rehabilitation. This is a pretty good overview and overlap of what we've already talked about. Tax treatment of premiums and proceeds. Personally owned health insurance. Obviously, your premium payments are not tax deductible, so you have to report that as income. But the benefits that you receive are tax-free. So that's a really big one, kind of a difference than the employer-sponsored plans, where some of the interest that's earned in those HSAs or whatever it may be, or the different types of health accounts, you may have some taxable aspects there. But if it's personally and privately owned, the premium payments are going to be non-deductible, but the benefits are going to be tax-free. Employer provided health insurance. Premium payments made by the employer, deductible as a business expense. Benefits received by the employee, taxable to employee as income. So as you can tell, those are the big, differences there between personally or employer provided health insurance. Types of employer health plans. Non-contributory. Employer pays the entire cost. Benefits part of employees' gross income and taxed income. So the employer's paying for it, but the benefits are part of your gross income and is taxed as income. Full contributory means the employee is paying the entire cost. The benefits received are tax-free by the employee, kind of very similar and essentially equivalent to a personally owned health insurance policy. Partially contributory, cost shared by employer and employee. Portion paid by employee is received tax-free, and a portion paid by the employer is part of the employee's gross income and taxes as ordinary income. So non-contributory, the employer is paying all the costs, and the employee receives that as gross income and is taxed as income. Fully contributory means the employee is paying for everything, but the benefits they receive is tax-free. Partially contributory is a mix between the two. So the cost is shared between the employer and the employee. A portion of the proceeds that you will get as the employee is going to be received tax-free, and another portion is going to be taxed as gross income and taxed as ordinary. So Guys, a lot of that was an overlap. This finishes up the last, part of the national exam, the last chapter for the national exam. Really, what you want to know here, and the differences, is the dependent children's benefit. That's a little bit more of new information. We already know about owner rights. We already know about the primary contingent beneficiaries, modes of premium payment. Also, want to know about the coordination of benefits, just so you don't double dip on your health insurance policy. Occupational versus non-occupational kind of makes sense, but just know occupational is either or, on or off the job. The different types of partial, total, and residual disability. Managed care, I don't think you'll probably have much on that, but control your behavior, controls your risk idea. Subrogation, that's kind of where lawyers get involved, and that's when you start to go over, maybe amounts paid from a third party, or something that was caused by a third party, rather. Workers' comp, just know that it's, workers' compensation for work-related injuries, and they have really good benefits as far as medical, income, death, and rehabilitation. And then know the tax treatment of premiums and proceeds for the health insurance aspect. If it's personally owned health insurance, you're paying for it, but the benefits you get is tax-free. If the employer is paying for it, then it's taxed as income for you. So those are the main differences there. Guys, review these chapter recaps. I hope this was helpful and really helps, give you guys some good examples of how you can remember the study material and all the different ways that you can utilize this information to pass this test as quickly and as efficiently and as fast as possible. So you can do what you really want to do, which is go out, help people, build your book of business, and start your career. Thank you guys for listening. This is the end of Chapter 9 recap. Please dive deep into your state. We're not going to do recaps for the state just because each state varies. So wherever you're taking this exam at, just know that each state is going to vary based off of wherever you live and wherever you're taking this exam. So thank you guys. Have a great one. Hope this helps.